What is up, everybody? Welcome to the next episode of the CRE News Hour. We have a weekly podcast at 3 p.m. Eastern Standard Time where we're going to be live to discuss everything commercial real estate and all the current events that are going on. My name is Henry Eisenstein, and I'm with my co-host, as always, Rafael Cayazo. How you doing, my friend?
What's up, man? Can't complain. I'm in the midst of a 24-hour fast, and I'm feeling pretty solid, so excited to be here with you all today. Yeah.
That's right. Yeah, 75 hard going well. We're crushing it.
Dude, yeah. I mean, you back in Miami now, or are you still?
Yeah, back in Miami.
Okay, so the outdoor workout's probably a little easier at this point.
Definitely a little easier than Jersey. I was bundled up like crazy for a couple days.
That's awesome, man. Well, congrats on that. But yeah, I'm excited to be here, man. I think it's going to be a really good episode today. So I'll work on getting us.
We got a lot of good stuff coming up. So where do you want to kick things off for today? And by the way, for you guys watching live, make sure you guys drop in the chat box down below where you're tuning in from and give us some feedback on the articles.
All right. So next up is going to be price-conscious retailers' fastest growing category. So as to be expected, as we start getting into a period of somewhat economic slowdown, people are becoming a little bit more price-conscious about a variety of different retail needs. And so we're kind of seeing a trend of these somewhat price conscious retailers being kind of making a lot of headway in the market. So obviously Dollar General has committed to open up 800 new stores, which again, Dollar General has been kind of an entity. If you follow the single tenant net lease market, I mean, they're popping up everywhere. I don't know how they're continuing to grow as fast as they are, but it seems that they're still going to be continuing to grow at a very accelerated rate. Five Below, I'm not sure if you have any in your market, Henry, but they've made a big push here in the Louisville market. I think they've already opened up 2 locations, and there's a couple more slated. Which again, the concept Five Below meaning that most of the things in the store are $5 or less, at least in theory. Same goes for Ross Dress for Less in Burlington. You know, there's going to be a lot of stores opening up. We have several large shops or stores here in Louisville. I know they're looking to expand a little bit more as well. So you kind of see those types of trends happening. And then the automotive space. These are actually trading on the second single tenant net lease market more regularly. At least from what I've noticed over the last year or two. So it seems like they're making a big push to expand in a variety of different markets. And so at the end of the article, they talked a little bit about some of the big box brands like Target and Walmart. Target seems to be kind of looking to increase their footprint, which is somewhat surprising when you think of, a lot of these big box owners or users. You think they'd be shrinking their footprint, but Target's actually looking to expand a little bit on their footprint for their new stores, and then they're going to be undertaking a lot of remodels. It seems like Walmart's kind of taking that stance right now, as they're going to be focusing heavily on remodeling their stores. So just kind of gave a brief overview. Go ahead.
Yeah, I love this article. I mean, just if you stay where you're at right now, if you're looking at the Target details, which I find interesting, right? Where it's saying that so they have 30 new locations, but what you had mentioned next line here, the company's considering a new store format of over 150,000 square feet, which is 25,000 square feet larger than the company's typical. But what's also interesting, if you're looking at Target and what they're doing now, is that they're adding grocery. Like, they're very heavy in the grocery side for most of these locations. They have a huge electronics department. I mean, it's really like a massive department store. I mean, they're really trying to take on, like the Walmarts of the world and compete with local grocery stores. So I think they're doing a good job. I'm actually quite surprised. It's actually pretty cool that if you scroll up a little bit, a lot of these different brands that are really starting to grow, like you were mentioning, the AutoZones, the O'Reillys, the Take 5 Oil is really starting to massively grow. So, I mean, like, look, guys, this is a good opportunity for those of you who really want to put the time, energy, and effort. Guys, it's all public information to find the real estate departments of these companies. Get in contact with them, get some information of exactly what they're looking for, and have a conversation about how you can possibly be bringing them some products. So, I mean, look, this is a great article to look into. You guys can try to find these types of articles, get in touch with Dollar Generals. They're opening up freaking new locations every fucking day, it seems like. I mean, 800 new stores in 2024, it's like 3 a day. That's freaking nuts.
Yeah. Well, that growth has been continued over the last several years. I'm sure you see it all the time
Yeah,
too. I mean, if you
of
follow
course.
the single tenant lease market at all, I mean, you'll see Dollar General's kind of being the mainstay in a lot of these markets. And so, no, I agree. I mean, and if you follow along too, the automotive uses have been very popular as of late. I mean, a lot of these users are going in, having developers build the building for them, and then they just sell it on the secondary market to recoup that investment. So, again, I think
Yeah.
it's a good opportunity for many people, for those who are interested in capitalizing. So, all right. So
Yep.
next, go ahead.
No, good. You're good.
All right. So next up is industrial tenant demand in the fourth quarter falls to lowest level since 2010.
Yeah, so this is pretty interesting stuff to see that like the demand curve here is as low as it's been since 2010, people. Right? I mean, like we were obviously in a crazy recession in 2010, and now that we're seeing that demand is somewhat similar, it's just freaking fascinating when it comes to industrial properties. Now, obviously, this is nationally, not just super specific markets. So you're gonna have to do your own due diligence based on your own local markets. But this is also just fascinating. Like, I'll give you an example. You know, industrial is not as crazy hot as it was even 2 seconds ago, is what it seems like, right? Even like a few years ago, 2020, 2021, 22, industrial is still pretty hot. A lot of expansion going on. It's not at all what it used to be. I think there's an oversupply in a lot of markets. I mean, obviously some sub markets are different than others, so keep that in mind. This is not, this is still national talk. But just keep in mind that, like, hey, man, like, I'm working on actually a couple development deals for flex space, for warehouse flex space. It's really interesting to see that, like, hey, in some markets, like that actually could be a terrible investment right now, right?
Mm-hmm.
So just keep that in mind that, like, hey, like, if you're going to be working on or trying to prospect with or possibly be working with developers, you need to be focused on specific markets where you're actually going to be able to see that there's, appropriate growth so you can actually make money on these deals instead of sit vacant for months.
Yeah,
What do you have
no,
to say about it?
100%. I agree with you, and I think partly too is that you kind of alluded to different types of industrial, which is I think an important distinction because depending on which market you're at, of course, getting into the smaller industrial at this moment in time is probably not a bad move. You mentioned a flex development. I know here in Louisville, I can speak obviously from my experience. There's still a very limited amount of inventory when it comes to flex space, and you're talking, the small to mid-sized contracting shops that need that type of space. There's still a heavy demand for it, and there's not much product. So if you're going to be undertaking a development, that would not be a bad idea for you to consider, even in this environment where interest rates are still pretty elevated. So again, I think it just goes to show the benefit and value of really getting an understanding of each local market before actually diving in. Because again, if you just read the main articles that said, "Hey, industrial's performing at a high level," yes, it has in the past, but at this point in time, things have shifted, and depending on what type of industrial product you're going to be focusing on, you may have some issues going forward. So.
Yeah, and I think that, like, this is just a good idea. You can leave this up. This is like an interesting. I love what you had just mentioned, where like it is also being cognizant of, like, hey, like those larger warehouse spaces, it could actually be really lucrative for you to chop them up and make it smaller flex spaces. It's like really finding out ways of, because these huge warehouses, these huge 50,000 plus, almost 100,000 plus square foot warehouses, a lot of them are sitting vacant. There's just not a lot of people out there who need that kind of space anymore.
Absolutely, for sure. So this is kind of an interesting article I thought I'd share. It's obviously NAR just continues to have issues, but essentially NAR's president actually cited blackmail as a threat as to why she was resigning after less than 5 months on the job. So if you guys have obviously heard the news, NAR was had to deal with a lawsuit that they lost, and now there's a lot of lawsuits coming in from all different parts of the country that will likely affect the way that, in particular, residential real estate is transacted over time. The previous president was stepped down because of some allegations around harassment, and this lady, Tracy Casper, filled in the void. And over the last 5 months, she's been operating as the NAR president, but apparently she received a threat from who knows who that was going to shoot. They were essentially going to disclose a personal, non-financial matter unless she stepped down. And ultimately she let the law enforcement know, but for whatever reason, she decided that it was just best for her to step down, and now a new gentleman's filled in. But I don't know. I think it just kind of continues to compound for NAR. And to be honest with you, I'm not too sure what NAR does. And I'm obviously a part member of NAR and everything, but in reality, at this point, I'm not sure if it serves the purpose that maybe it did many years ago. So I thought I'd get your take.
Yeah, I agree with you. I honestly have no freaking idea what NAR does. I mean, it's like basically a whole BS lobbying. It's basically
That's what
a
it
bunch
seems
of
like. That's what it seems
yeah,
like. Which I understand
yeah,
the logic of lobbying for the real estate industry, but I mean, it's just
100%. And the fact that you lost this kind of lawsuit to a bunch of morons is absolutely laughable, right? Like that we all pay you to basically doing your, like you didn't do your job. Like this is exactly what we pay you. You've never come, like we haven't come across this type of lawsuit. I don't know it, I don't even know the last time we've had a lawsuit to this kind of extent. But your entire job is just to protect us and lobby for us. And the one time that you were supposed to do your job, you failed miserably. Congratulations, Star. Honestly, no one knows why we pay you anymore. So I no surprise that she stepped down. I mean, I don't know if they're ever going to recover I don't know to what extent they'll ever recover, to be honest, in my opinion.
Yeah, I mean, I think it's going to be tied up in litigation for a long period of time, and
100%.
the pieces are going to fall where they may, but I don't know. I don't know how much it's going to affect the commercial real estate industry because again, there's in the commercial real estate, obviously in residential it is too, but we tend to have variable commissions, and a lot of times the buyers even sometimes pay the commission as well. So I'm going to be interested to see how it all plays out on the commercial side over the years. But
yeah, I'm really not worried on the commercial side, to be honest with you.
Mhm.
I think just honestly, like I'm very grateful I transitioned, a few years ago when I did into the commercial space 100%. And honestly, I could care less what happens on the residential side. I don't think it's actually going to affect the things that way we thought it has. I just
Mhm.
don't know how a lot of these companies are going to make it through the law, through the loss and everything like that. I mean, just,
I agree with you.
that part I don't understand, but I don't think the real estate world is going to be affected that much. I think just the way it's explained and the documents we'll have to sign will change on the residential side, and I don't think commercial will really be affected whatsoever.
Definitely. All right. So next up is office tenants maintain leasing leverage at the start of the new year.
Yeah, so this was just interesting. It's just an article about in New York the ridiculous office concessions that they're giving out these days. It's just freaking massive, right? And I think that if you're in the office leasing world, you should be able to negotiate some pretty fantastic concessions for your clients. A lot of these people just want great tenants, great long-term tenants that are not going to bust their balls. And if you have a great tenant that you're working with, I think you're going to be able to negotiate a fantastic lease for them. And if you're in office world, this is a really good opportunity to get creative. Really getting creative and working on different ways to provide more value to your tenants. Great amenities and great other things, because people have a lot of options these days. People are asking for a lot of concessions these days. And if you have just a run-of-the-mill office building with zero amenities, good luck filling it.
Yeah, I mean I think that's where the issues are going to lie. I mean, in the B2C product in these major markets, I mean that's where the distress is going to be. It's not necessarily going to be in the top shelf nice product that's in the center and in the major CBDs, because again, if you can step up into a nicer product and only have to pay marginally more, like why wouldn't you do that versus being in a building that's falling apart and not obviously meeting the needs of your clientele, which is obviously your employees. So I don't know. I agree with you. I think. Go ahead.
I was going to say, like, I do think Class A office buildings are going to have some struggling times. I think the massive office buildings where they have, they had or have major tenants that are consolidating, getting smaller. Like, I think a lot of those are the ones that are going back to the banks. Like the huge multi-$100 million office buildings. Those are the companies. Those are the buildings go back to the bank. I just read an article. I think it was actually in that. I'm not sure if it was actually in that or not, but there was something I was just reading where there was an office building in Denver. I'm pretty sure it's Denver, Colorado. And it was a building that sold in 20, I don't know, maybe 10 years ago or something like that. Okay.
Mm-hmm.
Last time it traded was for $51 million. It just sold within the last couple of months or last month for $4 million.
Yeah. So
it's just like nuts.
Yeah. So there's a building that's pretty popular. I mean, famous here in Louisville. It's called the Fifth Third Building. Obviously, Fifth Third Bank. So they've owned it for many, many years. It was owned they bought it for like $33 million in like the late 90s, and it just traded a year and a half ago for like $6 million. So think about it. It's like a 350,000 square foot building. I mean, to be honest with you, a $6 million building, like the average person, like if you looped in friends and family and made it work, you could probably buy this $350,000 building. Obviously, the maintenance cost on that would be significant, but I mean, I remember when it traded, everyone in their mom, like I knew, they're like, oh my gosh, we could have bought that building for 300, whatever. So
yeah,
anyway.
but then I was gonna say, like we're actually working on a building like 200,000 plus square feet in Jersey. Building only is 10% occupied. Okay, and your annual burn is like $300 to $400 grand.
Oof, yeah.
Okay, and so it's like, yeah, like sure, you could buy, and actually I think it was for this. They want $6 million in this case.
Mm-hmm.
But it's just funny because it's like, okay, well, yeah, the upside is potentially decent if you can fill it. But the thing is, like, okay, what tenants are you going to have that are going to fill another, in that case, 350,000 square feet, or in my case, 190,000 plus square feet. It's just, good luck.
Yeah, no, I mean, it takes a lot of legwork, and these guys who bought it are going to put in another 10 or 15 million into renovating and trying to bring it up to speed. But again, that's a big risk on their part, which hopefully plays out. But all right, so next up, attacks on Red Sea shipping disrupting retail supply chain. So the reason I thought you saw this, yeah, the reason I wanted to push this out was because I kind of showcases the intricacies of our globalized economy. So obviously, we have to contend with sometimes that there are groups across the world that could potentially attack or have interest in trying to capture affect the supply chain. And so in this case, a lot of these cargo ships that have been coming to Europe and other parts of the world have been attacked by these rebel groups out of Iran that has obviously affected how they're getting to their destination. Obviously the U.S. and other nations have been, actively trying to counteract these measures, but it's caused a lot of different corporations and entities to reconsider how they're directing the ships, and so it kind of referenced down here that they're starting to go now around, the Cape of around the Cape of Good Hope at the southern tip of Africa to essentially make their route instead of having to contend with going through the Suez Canal, which obviously would shrink the time that the ships would take to get to where they're going. So that's going to increase costs of materials. So, depending on what these ships are carrying, which in this case, they may be retail products. So retail products are obviously going to be affected by that. If they were carrying any type of construction material or anything else like that, that obviously would go down the line and ultimately affect the customer as well. So just thought I'd share this article to kind of showcase that, there's a lot of moving pieces, not only just in the U.S. That's why sometimes getting an understanding of what's going on around the world too can be pretty important. So.
Yeah, I mean, I thought this was super fascinating. And it's like, we're so used to now because of Amazon and other things that things show up in a day, right? Like we're within the same day, which is just freaking absolutely nuts. But it's like this is real issues that are going on for a lot of other companies that are trying to compete. Like think about it, like your products are mostly coming from overseas that we're ordering from Amazon, and it's going to take a lot longer if they're going to have to start going. That's like an extra couple thousand miles to go around after the long way instead of going through the canal but they're having so many issues. So this is going to be interesting how it pans out. I'm actually surprised that, these tankers are, it's like they have not been able to figure out how to not handle these pirates, like the pirates that are coming out. It's like, it makes no sense to me. It's like we're in 2024.
Oh, I know. Well, it's rebel groups that are funded by Iran. So it's like, they've got, a lot of funding, and I mean, they're attacking strategically. Like, it's very complicated.
But all I'm saying is just like we have the ability to literally have undetectable subs and all this ridiculousness, and it's like you can't put a freaking a gun on some of these these tankers and like have a little bit more security. Like there's like nobody on here who's trained to handle these types of situations. It's like why not just build these things to be a little bit more protective? I mean, if you built these things like they're not, because here's the thing, they're not giving issue to aircraft carriers, warships, submarines. Like you're having issues with that. You're having major issues with these huge cargo ships that have absolutely zero fences other than some fucking hoses. It's like these have like the spray hoses off the top.
And that's why these groups are targeting those ships, because they don't have defenses, and unless they have a convoy with U.S. troops following along with it, which obviously drains resources, then they decide, oh well, we'll just attack the ship and take whatever we want, which
I just find it. I get it.
Yeah,
I just find it entertaining. It's just like, guys, it's 2024. Like we should be able to, add missiles to just about any freaking ship,
or at least figure out where these guys that are attacking are. Being able to triangulate their locations and other things like that. But anyways, it's an interesting topic, and obviously geopolitical topics are pretty interesting to me. Like obviously I follow along with what's going on overseas, so it's kind of interesting to share.
And by the way, audience, we're gonna. I'd love to get your feedback. If you want us to start getting geopolitical or even political, make sure you drop it in the comments down below. I don't mind sharing my opinions. I definitely don't mind it. So make sure you drop it in the chat box down below. We can get pretty crazy.
Absolutely, and it's good dialogue too. It's always fun. So, all right. So next up is property returns still trail inflation rate.
Yeah. So I put this on here because I find it fascinating. Also, like I'm so curious how the heck they're coming up with some of this data, just to be blunt. Because it's like some of the information, if you scroll down to this article, it shows that property returns. Okay. Now, it says, let's see right here. However, the fallout of the property returns has been harsh. The average total return, which peaked at 15.8% in the fourth quarter of 2021, now dropped to 1.3% as of the third quarter of 2023. Now returns had fallen below the inflation rate by the fourth quarter of 2022. So what's fascinating to me is that I'm really having a hard time understanding. It's like, how on planet Earth, why are people even buying these properties for a 1% return? What are you absolutely out of your mind? Who the hell's buying these properties? So it's like, I just don't believe that the returns are actually what they're mentioning. Because if you just did a cost seg, okay, if you just focused on the details around doing tax depreciation planning, right, for any property. Okay. If you just play the tax play, it's probably more than a 1% return. Okay. If you just focus on the tax side, you're probably getting at least 2 to 4, 5% a year return just on the tax side. So it's like, I don't understand how on planet Earth they're coming up with a 1% return. I just think this is kind of bullshit. Keep this in mind. Some of the articles that you're finding kind of, I don't believe a single word here.
Yeah, I mean, I don't know what they mean by return, and you know as well as I do, like returns can be different for different people, right? The cash on cash return could be a return, the internal rate of return could be a return, and they're calculated differently, right? So I don't understand what they mean by return, and even if you look at it from a all cash perspective, like if you buy $1 million property and you could easily get $50,000 to $100,000 in net income if you obviously do your due diligence and get the right opportunity. So even in that scenario, let's say you get a property at $70,000 a year NOI. I mean, you're still in theory making a 7% return. So not really sure what this means. I would assume obviously this is all levered like with debt. So
no, I get it. I even with debt though, it's like I don't believe that people who are buying properties where their whole purpose of buying properties was really to make money in commercial real estate. Because if you don't make a profit, I don't understand the purpose of buying commercial real estate, obviously outside of owner-occupant properties. In this case, I just am kind of surprised. I just don't believe that people are getting an average of 1.3% returns.
Yeah, no, I couldn't agree more. In the meantime, guys, if you guys don't mind, type away in the chat box. Let us know where you guys are tuning in from. It's always cool to see all the people that are tuning in from all across the country, so and abroad. So feel free to type away.
Yeah, and we definitely appreciate the comments. Give us your 2 cents. Do you agree? Do you disagree? Please just drop it in the comments down below. We always appreciate that. And obviously, guys, listen, we come to you live each and every single Wednesday, 3 p.m. Eastern Standard Time to give you all of our 2 cents on everything commercial real estate. So I hope you guys enjoy that. And by the way, if you guys have any fantastic deals that you guys would like some support in underwriting, make sure you send that to deals@crenewshour.com, deals@crenewshour.com. Put the subject, the address in the subject line, and we'll be able to support you.
Sounds great. All right. So kind of in the same vein, so when will CRE capital markets, when CRE capital markets will turn the corner? So, it's just kind of a high level article describing the amount of quote unquote dry powder that's still available. There's a lot of money out there still. So they said that apparently, based on this report, there's roughly $419 billion globally that's available to be deployed in the commercial real estate sector. 250 billion of that is actually in the United States. So obviously, we have the largest percentage of capital that's available for this for these types of opportunities. And so, again, it just kind of lends itself to saying that the rest of this article kind of highlights the fact that the banks will eventually start to release they'll be less restrictive on what they're loaning out, and based on geopolitical events, there's hopefully going to be able to crank up loaning money out for these types of opportunities, and their best guess is likely going to be sometime mid next year or this year, I should say. And so that's kind of been the sentiment for most people. And again, it's just kind of a summary article, nothing too detail oriented, but I thought I'd kind of just share it to kind of reiterate to the audience that we're going to have a pretty solid year in 24. So
yeah, I think that this is a fantastic reminder that when you're optimistic and you work super hard through the tough years, like if you were pushing through 2023, because I think 2023 was one of the toughest years people have experienced in a long time, especially if you've only been in the industry a few years, definitely one of the tougher years that we've seen. I think that it's important to note that it swings, right? The economy, the markets, they swing hard, and it swung really, really hard to the point of it being easy per se, right? Like a ton of transactions in 2020, 2021, 2022. And then it swung really, really hard the opposite direction where it kind of came on, not say a screeching halt, but, a lot less production volume, a lot less sales overall when interest rates kind of, started ticking up massively in 2023. So I'm excited. I think this is really important for people to pay attention to. A lot of opportunity in the air. And if you can find some amazing opportunities, people are ready to put some money put it out to work. I'm pretty excited.
Yeah, no, I couldn't agree more. And, again, I think what it comes down to, and, what you kind of reiterate all the time, is just don't change, just stick to the positive habits, and it doesn't matter if it's good times. It doesn't matter if it's bad times. You just keep doing the right things on a day to day, and eventually things will work out in your favor. So
100%.
All right. So next up is Chicago property owners sue to block vote on transfer tax increase. I know we talked about similar stuff in the past.
Yeah, so this was super fascinating. Obviously, coming from New Jersey, where taxes are freaking high, transfer taxes are high. Jersey likes to smack you on the way in, the way out, and every 100 times in between. So this is just another funny, interesting article that I found fascinating. Where it's just like I'm perplexed. Okay, I am confused. I am perplexed. I am shocked that all these freaking states think that it's okay to continuously try to tax the rich in any way, shape, and form possible, especially in this case, which is just, do you understand how much money it is to try to increase the transfer taxes to the numbers that they're trying to increase them to for larger properties? I mean, we're talking tens of thousands of dollars per property sale, okay? Per property sale, increase-wise. This is not like, it's just an astronomical amount of money that they're trying to increase the transfer tax to. And this is just Chicago. Nonetheless, every other freaking state that's trying to do something similar, it's just absolutely ridiculous to me that what they're trying to do. I think it's stupid. And like I was just talking to one of my coaching students today about, how to handle situations with transfer taxes where, if it's over $1 million, someone's got to pay a 1% transfer tax. Seller doesn't want to pay it. Buyer doesn't want to pay it. What do you do? Right? It's just like, think about if that's only at 1%. I mean, imagine if it all of a sudden was 2 or 3 or 5% of the purchase price. I mean, so it's just an absolutely ridiculous thing that they're trying to do, and I'm completely against it. And honestly, I don't even understand the whole purpose of it in the first place. I think it's just a money grab.
It's a money grab, yeah, of course. They're just gonna they want it for other programs that they're gonna use and whatever programs they've defined.
BS program. It's
yeah.
just not even, and half the time they're not even using it for programs. It's just, to put money in other people's pockets.
Puts in the funds. Yeah, I mean, 3%. That's a steep one, especially if you start talking. Said on amounts over 1.5 million, and if you're talking about
ridiculous.
Building, I mean, that's a lot of money, man. $10 million building, you're talking 300 grand.
It's asinine.
That would defer a lot of people. And that's another thing that's kind of surprising to me too, is because most municipalities, and I can't comment for every single municipality, but at least in ours, when a property trades, and if it trades for a higher value, it's reassessed for that higher value. So property taxes obviously increase as a result. So by doing this, yeah, you may make some money on the front, but it probably will reduce the amount of people that actually want to trade the property, unless they have to, unless you're, it's an estate or whatever else. But
I'm just saying, think about how crazy this is. Okay. Take a $10 million deal. Okay. $10 million bucks. They have a 3% transfer tax. Mm-hmm. They have a 6% commission, and they have all the closing costs that they have to handle. We're talking about almost 10% to sell a property these days. Mm-hmm. I mean, it's just absolutely ridiculous. We're talking about $1 million nearly on a $10 million deal. I mean, it's just affecting so many things unnecessarily. It's like we should be making it as affordable and as easy as possible for people to sell. So there's more transactional volume. Everybody makes money. Do you understand how many people make money on a transaction, on a property transaction? How many different industries make money on a property transaction? And it's like, why are you trying to make it more difficult? It makes absolutely no sense to me.
Yeah, no, I agree. I mean, even governments make money. I mean, you got state tax, you got state,
What I'm saying.
So, and also in the future too, with the reassessment of the property. I mean, and again, I can't comment on all municipalities, but in most municipalities, when you trade a property, it reassesses. So anyways,
it's just ridiculous. I can go on forever.
We like to beat dead horses here on this show.
I'm about it.
I am about it too, man. Sometimes you have to. Sometimes you got to just grab the mallet and just go for it. That's what
Whoever's in charge of this BS, I want to know who you are, and I'm coming to your front door.
That's funny. All right. So next up is CRE prices continue dropping, but rate of decline slows. So kind of indicative of what we've been talking about over the last couple of weeks, and really since we started the show, is that things are always shifting in the commercial real estate space, and it seems like we're starting to kind of hit that trough in the market, at least from a property value standpoint. So it kind of references here that year over year, when you compare 2022 November to 2023 November, there was a 60% year over year drop off in transaction volume, but the actual drop off in pricing is starting to taper off to now where it's starting to stabilize. So again, when you start looking at these historical graphs for property values and transaction volumes, there's always a period of time where things start to level out. And I really do think that we're on the upswing, especially over the next 6 months. I think we're going to see a lot of increasing transaction volume, and hopefully over the next 12 to 24 months, you'll start seeing more of an uptick on property values as well. So again, this is more of just a summary report. Connect CRE is a pretty good resource if you guys ever get a chance to check it out. So.
Yeah, I'm excited for this kind of stuff. I think it's fascinating. As we know, as interest rates start to come down, pricing and valuations are going to come up a little bit, which is fantastic news. Banks are going to let up on their restrictions, and I think there's going to be a fantastic year regardless. Just, like we had mentioned, continue pounding the phones, find some great opportunities, and let's make some freaking money.
That's awesome. All right. So that's all we have, at least for the article side of things. But in the meantime, guys, if you guys are watching this live, feel free to type away. If you guys have any questions in particular, it's a new year. There's new beginnings. We're really excited about what's to come. What are you guys excited about? Feel free to type away, and we'll continue to have the dialogue.
Yeah. Guys, drop it in the chat box down below. Love to communicate. If you have any questions, make sure you drop it in the chat box down below. Love to be able to support you and making sure you have the best year yet. Guys, it's January 10th. We are 10 days into the new year. How you doing on your goals? Take a pulse on the business. And again, this is a good time for you just to do a quick check-in, because if you have not been consistent with your New Year's resolutions and all that BS, right? You got to be checking yourself. Make sure you get into a better schedule, a better routine. Because obviously, if you promise you're going to do X amount of business, which means you're going to make X amount of phone calls, X amount of contacts, leads, you name it. Like, again, we're on the 10th day. Have you been upholding what you promised yourself you were going to do? If not, why? How can you make some adjustments? So who's got some questions for us? Again, drop it in the chat box down below. And again, obviously, if you like the content, make sure you give this a thumbs up anywhere that you're tuning in from. We appreciate the value and the love.
All right. So in the meantime, Cyber LA, regular on the for the show. Good to see you, man. Tons of retail theft in LA, kind of referring to some of the articles we had regarding retail. Yeah, I mean that's kind of happening pretty regularly over there, which is unfortunate. And really, I wouldn't say just LA. There's other parts of the country where it's happening. It just seems like they're just not addressing petty theft as much as they were before. So I don't know.
Yeah, I mean, I got family out in LA. I'm kind of shocked at what they're doing out there. I mean, it's, definitely some parts of LA have definitely changed drastically. Yeah, let's keep going through some of these comments. We got John. Thank you. Let's see. It's really interesting about the industrial space. Yeah, I mean, look, and keep up to date on your local market information in regards to what you're selling. Very, very important. Zane, thank you for tuning in. We appreciate you. Breaking news. What else we got here? Is interesting. Thank you guys. We appreciate you for tuning in. Cyber LA, we appreciate you guys. Well, listen, real fast, I actually wanted to spend some time doing this. Let me just share my screen real fast. I'm going to do something really interesting, and then we can kind of wrap things up in any direction you like. I'm going to bring up LoopNet real fast because I thought this was super interesting. Because again, for a lot of you guys who are like, hey, how do I find some really good deals? I want to show you something very, very interesting that I play around with a lot. All right, here we go. Now I'm going to share my screen. Share my screen. Here we go. Okay, here we go. Great. Okay, so I'm going to show you for Florida. Let's do Florida first. Florida. What's going on here? Okay, watch this. So very interesting thing that you can do with this. Give me a minute. All filters. So you go to the all filters section. I like to play around with this keyword part. Okay. And you can try a bunch of things like this. Seller financing. Okay. Having keyword seller financing. So let's just say that I'm looking at sales. Of course. Okay, let me do it one more time. Seller financing. Search. So what's going to happen now is that I'm going to select all. Make sure that's checked. Search. I do want to exclude a few things, like exclude pending sales. Cool. All right. And I also don't really care about businesses for sale. Okay. Here we go. Search. Let's see what we got. I think I actually linked. Here we go. All right, cool. Yeah, so give you an idea, right? So now I just did everything that is seller financing in Florida that is for sale. There's 218 results, guys. So if you're looking for some type of investors who are looking for some creative financing deals and you don't have any, guys, you can find this kind of stuff really simply. And again, like this is just LoopNet. Anyone on planet Earth can look into this kind of stuff. So again, 218 results is pretty cool. So if you look through this, because watch what you can do here. You now can sort. I would sort this by, let's say, really high cap rates. Because I would either sort it by size or by cap rate, like building square footage or by cap rate. So it's like, okay. Now, again, like, this is really unique stuff. But again, if you have a guy who's looking for hotels or motels, this is a 12% cap rate and they're open to seller financing. Let's see what else here real fast. 24-unit mobile home park for $1.7 million. It's almost a 10 cap. Maybe you can get them to hold a note at a much lower percent interest rate. Seller financing says available. I mean, like, this is just a really make it easy for you to win, right? If you're looking for awesome investment properties, like you can make it really easy for you to win. By here you go. This is 10% cash on cash day one. I mean, I don't know if I believe that kind of stuff, but a lot of this kind of stuff, guys, like, this one here is an 8%. I don't know if, again, don't trust the cap rates, don't trust anything. You gotta have to do your own due diligence. But guys, like, I could buy an 8-unit or a 16-unit building here in Florida, okay, and get seller financing. Maybe they'll hold a note for 90%. You don't know. The point is, like, this is a fantastic and really simple, easy way to try to find decent deals that maybe you don't have to come across on your own, right? I mean, now, I'll show you another one. Now that's seller financing. You can try things like this, right? Estate sale. See what comes up. Now, again, sometimes it doesn't have the entire thing specified in the results, but again, properties in estate sales. You can look up, I'll look up things like fire damage, or structural damage. Let's see if anything comes up. Structural damage. All right, structural damage didn't have anything. Sometimes you can type in fire damage. You could type in mold. Same kind of thing that you could do for single families, like when you're coming to wholesaling. You can do the same thing for commercial real estate. Here you go. Fire damage, right? Three results, right? I mean, this is obviously, weird looking property. So if you do it in other areas, maybe you have a better chance of looking into this. But I just have a whole entire list that I like to look through for all these different types of properties. So, really, really interesting opportunity to find some good deals. Figured I'd share it with you guys because I've been playing around with this a lot. Really simple way to do that.
Definitely. Well, thanks for sharing that. So Jalen, he's tuning in. Say, hey, Jalen, how's it going? Thanks for all the content. Helping me get started a lot. So great seeing you, man. Thanks for being on the stream.
Thank you
for
tuning in.
Cyber LA asks, are the interest rates negotiable with seller financing?
Yeah, of course. Everything is negotiable.
Everything's negotiable. Yeah. That's the benefit of seller financing is if you can get the seller to agree to what the terms that you're providing, then yeah. I mean, that's because banks are a lot more rigid.
That's right. Everything's negotiable until it's not negotiable, right? Like I will offer anything, present anything, and then based off of the response, I get to negotiate even some more. So everything's negotiable. Listen, my friend, anything else you want to make sure that we mention before we wrap up today?
No. I obviously appreciate being here with you, and it's great to see everyone tuning in as well. We like I said, we tune in every Wednesday at 3 p.m. Eastern Standard Time, and we'll go over the latest news, trends, etc. And then we'll also, typically go over some deals as well. So if you guys have any deals that you'd like to send our way that you think could be a good deal for us to kind of profile, feel free to do that. We'll go ahead and include that. Our email as well, so you can do that as well. So that's it.
Yeah, guys. Yeah, we appreciate you guys tuning in. We'll see you guys next time. Thanks so much, and take care, everybody. Have a fantastic week.
See you guys.